Welcome to this explainer. Okay, let's jump right into this because this is absolutely crucial. I want you to imagine getting into a car accident tomorrow. You're shaken up, maybe a little stressed, but thankfully, everyone's totally fine. But then, the real nightmare actually begins. You find out your insurance company won't pay a single dime. And not because you forgot to buy insurance, but because of one tiny, hidden mistake buried deep inside your policy. Right, what if they simply won't pay? Every single year, millions of Americans are overpaying for car insurance, while these companies quietly rake in literally billions of dollars in profit. And the craziest part? A tiny hidden oversight in how you initially set up your coverage could completely destroy you financially. Most drivers have absolutely no idea how this system actually works behind the curtain. So today, we're going to expose the industry's best-kept secrets. Here's our roadmap for today. We're going to cover the algorithm behind your premium, the minimum coverage trap, the credit score secret, the loyalty penalty, mastering your deductible, and finally, the true goal of insurance. By the end of our time together, you're going to have the insider tricks and the straightforward changes that can literally save you thousands of dollars. All right, Section 1, the algorithm behind your premium and how they price risk. You see, most people think insurance prices are just kind of random, or maybe that they're standard across the board for everyone. Well, they are absolutely not. Insurance companies are businesses first, right? Their main goal is profit. And to maximize that profit, they use these ruthless, highly complex algorithms designed to predict exactly how risky you are. The algorithm isn't just looking at whether you stop at red lights, not even close. It's looking at your age, your credit score, your driving history, your exact zip code, the specific model of your car, and even how often you drive. They are basically building a massive, complete mathematical profile of your entire life. Think about it like this. You have driver A paying $120 a month and driver B shelling out $300 a month, and they are driving the exact same car. But because of those hidden algorithms we just talked about, one driver is paying substantially more than double. The algorithm just coldly decided driver B was riskier based on all those background data points. Which brings us to Section 2, the minimum coverage trap. This is a genuinely dangerous financial error. Because people want to beat those high algorithm prices, they often just choose the absolute cheapest insurance legally possible. Minimum coverage sounds great for your monthly budget, right? Well, until a serious accident actually happens. I want you to visualize something pretty terrifying for a second. Imagine you're driving on the highway, you hit a patch of black ice, and bam, you crash into a brand new luxury vehicle worth $100,000. It is totally totaled. But wait, your minimum coverage policy only pays out $25,000 for property damage. So, here is the absolutely crucial point. Guess who pays the rest? You do. You are personally on the hook for that remaining $75,000. That single accident could wipe out your savings, your future, and your credit in one fell swoop. The harsh reality is, cheap insurance can become incredibly expensive later on. Wealthy individuals understand this risk perfectly. That's exactly why they prioritize buying much higher liability coverage. It's not because they think they're bad drivers and expect to get into more accidents. It's because they are actively protecting their savings from total disaster. Moving on to Section 3, the credit score's secret. Remember all those data points the algorithm tracks? There is one shocking truth hidden in there that most drivers just do not know. And it's this. Bad credit equals a massively increased premium, even if you are a perfectly safe driver with 0 accidents on your record. Crazy, right? In many states, insurance companies legally use your credit score to set your price, because statistically, they believe people with lower credit scores are riskier to insure. You could literally be paying thousands of dollars extra every single year just because of your credit history. It has nothing to do with turning a steering wheel. It's wild, but that's the system. Good credit saves you money absolutely everywhere. All right, Section 4, the loyalty penalty, where staying actually costs you. Look, from day one, we're taught that loyalty is a good thing, a virtue, right? So most people just stay with the exact same insurance company for years, figuring they're getting a great deal for sticking around. Well, it is time to thoroughly debunk that massive myth right now. Welcome to a little industry secret called price optimization. It's this incredibly sneaky practice where companies slowly raise your prices over time, assuming that since you're a loyal customer, you probably won't notice, or he just won't bother with the hassle of switching. Yes, they actually punish you for sticking around. The bizarre reality is that loyal, long-term customers almost always end up paying way more than a brand new customer who just walked through the door. So, what's the game plan? Smart drivers totally refuse to pay the loyalty penalty. It's simple. Shop around regularly, switch companies, save thousands. Even just taking a single hour to compare rates and switch providers every couple of years can keep huge amounts of money in your own pocket. Please do not let comfort cost you money. Which takes us to Section 5, mastering your deductible to control those out-of-pocket costs. This is the next massive component of your policy, and honestly, making a mistake here destroys more people financially than the actual car accidents do. The deductible is just the amount of cash you have to cough up from your own pocket before your insurance finally steps in to help. So you have two distinct strategies. A low deductible means you don't pay much up front if you crash, sure, but it requires much higher monthly payments, basically draining your paycheck month after month. A high deductible means lower monthly payments, saving you serious money long term. Many wealthy people deliberately opt for high deductibles because they already have an emergency fund sitting in the bank to cover that upfront cost. They self-insure the small stuff, avoid the expensive monthly bills, and keep more of their own money. Finally, Section 6, the true goal of insurance. It is all about protection. To really master your coverage and stop overpaying, we kind of need a fundamental mindset shift about what those monthly premiums are actually doing. And it boils down to this. Insurance is absolutely not an investment. It is protection. So many people misunderstand this. You don't buy insurance hoping to quote-unquote make money or come out ahead on a claim. You buy it solely to avoid a catastrophic financial loss. Once you make that simple mindset shift, it becomes so much clearer exactly how you should structure your policy. There's this quote directly from our source material that just puts it into such stark perspective. It says, "One accident, one lawsuit, one mistake can ruin decades of hard work." Financial freedom isn't just about saving pennies on a monthly bill. It's about building this intelligent, unshakable fortress around yourself to protect against those random disasters that can wipe out your entire future in a split second. Which leads me to the final question I want to leave you with today. Are you actually protecting your future, or are you just blindly trusting the system to take care of you? Remember, these insurance companies make billions of dollars off people who never read the details of their policies. I'm challenging you to be the smart driver. Before your next renewal, take a really hard look at your coverage. Shop around to dodge that loyalty penalty, double-check those deductibles, and make sure your safety net is actually going to catch you if you fall. Thanks so much for joining me on this explainer. And remember, the goal isn't just to save money today, it's to protect your entire tomorrow.